Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we're going to try to make sense of some of these charts. Now, this happens to be the Russell 2000. It's the second largest of the stock index futures. You can see here we bottomed on Friday the 14th. You remember that day we rallied 1, 2, 3, 4, 5, 6 days. We made a slightly higher high today by a couple of ticks, and that was 382 off of the high that we made right back here. And there's a lot to be said about this because there's some nice harmony. The last time we had a nice 4-day rally like that, we went up that far. So let's just see how close we were this time. And we'll just draw it over and put it in. And what do you think? It's pretty much spot on. That tells us that this may be it. So what you want to be watching for, either today or tomorrow, any close below these lows right in here, especially if it goes below Tuesday's lows, you want to be ready to possibly be short. And there's a reason. You can see that the worldly stocks, the Chinese stock market, the Hong Kong stock market, the German stock market, the UK stock market, and some of these, I don't know, I haven't seen India, but that should be a big one. But they're all turning over, and we've turned over, and all we're doing now is bouncing back. Okay, now let's move on here and try to do these one at a time. The next one we're going to do now is the NASDAQ, because that's the one that led this market up. Okay, it led it up and led it down both ways. Now here's where we are. We're going to get this up here, and you can see here we're going to move this around. This is, to me, folks, this is important stuff. So if you don't enjoy it, listen to Elton John or something for a while till I get through this. We got the equinox coming in tomorrow, the 21st. Okay, so what we're going to look at is right here. We're going to clean all this up because here was the bottom. All right, there's 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6, 7, 8. Today's the 8th day. We did not take out the previous day high. However, we did do that in the Dow Jones, and I'm not sure whether we did it in the, hold on a second here. We'll get this up to take a quick look at it on that, wow. Hold on. No, we did not. You can see here we missed it by just a little bit. We're a little below that. This was just a 1, 2, 3, 4, 5, 6 day rally also. But the key is if this is going to be like it was in 29. And folks, I'm not trying to scare anybody or anything. I'm just trying to give you some history of what I study when I look at this. Peter Leides was the first one to, tell me that, hey, look, this could possibly be it. And I've been looking at it. And the thing is, folks, it's even more bearish than the one in 1929. Let me show you why I say that. This is the 1929 market. You see, we came down. We had this huge gap up, much like we did on Monday. Remember that giant gap? So this was 1, 2, 3, 4, 5, 6, 7 days up. This stopped at the 61, exactly 61% retracement of the September 3rd high. That made it a head and shoulders pattern, just like we're seeing in the German DAX. The FTSE, and so that's what we're doing. Then this is here's where we have to play, folks. If this is correct, there's things you can do. If this is going to be the high, either today or Friday, okay, it's when you come in Monday. If you come in Monday and start to go lower, that's when you want to pull the plug and say, yep, I've had enough. I'm going to stand aside and do something else for a while until this market has a little bit more semblance of safety, because right now it's very, very dangerous. And look what happened when it took out the low of October the 3rd. Okay, this was the 3rd, this was the 11th. And then if we broke that, look at that, market rallied right up here. You know what that price was, folks? That was 382 off of this high right there. Exactly 382. And then the next day, it opened a little bit higher. And then when it took out that low, whoo, that's when the old proverbial stuff hit the fan. All right, that's one thing. I want to walk you through how this has happened before. This is in the 2008 crash. Okay, I started doing the show here at 2007 in October. That was the high. There was a secondary high in May of 08. This was 07. This is 08. You can see the ABCD pattern here. There's a 382 pattern with a perfect ABCD. I'm going to show it to you in a different way, but that's it, because I was involved with this. We thought this was going to be happening, and that's exactly happening, because I was following the Bradley model at that time. And this was the Bradley model. You notice here that it didn't look too swift through here. You can see the day was off by a little bit. The trend was down. This was okay. This was okay. This was okay. It was telling you it was lining up pretty good. And then look at this. You come in right here and you're setting exactly at the 382 retracement. Tom Hugard was staying with me for the month. I was training him way back in 2008. And I'd met Tom in 2004, so we become very good friends. And we traded this thing through here. And we had some really good moves. We had some big, what we call a snapback. I didn't put this in, but if you put that rally high right here to match that, that was a 382. That led to the big ABCD down, okay? And that was the first bottom. There was the second bottom, and there was the third bottom. And I said on March the 9th, try it again, Larry, March the 5th, and you can see there's the Bradley model coming down. You can see it's not perfect, but boy, it was perfect this time, because I said it would rally, best rally in 70 years. Well, it wasn't the best rally. It's a continuing bull market that lasted until the Dow was at just around 7,000, and it went to 45,000. And so we've seen a major high, folks. I will not see another high in the stock market in my lifetime, and I'm not even sure how I'm going to live, but I know it's not going to be that long. Okay, now let's move on to talk about just a couple other things that have to be brought to our attention. First of all, let me go back and reiterate what we're looking at here in these markets. I want to bring up the one that I want to see. This is it. I think this is the NASDAQ. Okay, now if by some stretch of the imagination that we get up here and then we don't start down on Monday or Tuesday, then this whole scenario could be wrong, okay? Right now, we've had the 7-day rally. It can't even make a 382. Remember, in 29, it made a 61% retracement, and that was a big deal. But now, that's not the same thing. It's acting weaker. In fact, if you look at all the world stocks, I just pointed out to some of them to you, that they're all looking pretty nasty. Well, let me show you something else. You're not going to believe this, folks, but this is the 23rd of December. Can you believe it already? It's come so quickly. So get your presents out and get ready to unwrap a present, because I'm going to give you something that when I saw this, I said, are you kidding me? Let me get it up here and show you this, folks. This is the gold market volume and futures. Look at this. The last 5 days, where are the players? Hello, where are the players? Where? Yeah, it's going up, sure, whatever it is, a short covering, I don't care, but where are the players? They're dropping out. We're 1/2 the volume we were just 5 days ago, yet the market goes higher. How does it do that? It does that by short covering. And that's where we're going to talk about next when we come back from the break, because I did a little special report for one of our friends, and I thought I'd share it to you. Share it with you today, because it's a little different than the stock stuff, but it'll give you a little flavor of some of the things that we're watching here as we're watching these things.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, this is the GLD, which is the ETF, is the ETF for the gold, okay? Now, this is trading at the high so far has been just a tiny bit above this, made a higher high yesterday at 282. Now, this is a long-term weekly, all right? Now, it's different than the futures. The futures are so different. But what I want to show you here is risk versus reward, okay? Now, as we take a look at that, what we're going to do now, there's the GLD. Now we're going to look at it over here. You can see there was the high yesterday. Now, today it's down here a little below one. It's around 179. This is largest gap. Gold was at 30.10 right here. This is, on Monday I said this is where you want to do it. Of course, it gaps up Monday. And right now those positions are still underwater. $5,000 is now under water by 1,300 as of about an hour and a half ago. But look what you got here, folks. You got a big gap up like this, all right? And let me show you something about potential, all right? If we go back to the GDL way back, now first of all, before we do that, we want to come over here and look at the German, let's go back to where we were in Hong Kong in August, 1939 per ounce, okay, in 2011, August of 2011. It dropped in half, came all the way down here to, well, this is more than half, but that's exactly what happened. But look where we are now. We've just completed a 61% retracement of the gold miners index, all right, with gold right here. Now, can someone explain to me, you get a move like this, and this is, and you can't even do 3/4 of that move, and this one goes off the chart. Now, what's wrong with this picture? It must have been something wrong with the gold trees. Maybe the fruit on those gold trees was not coming through, but you would think that thing would be a lot higher, but we just hit the 61% retracement again today. So that's the whole thing. The key to looking at this, and this is just, from looking at it, how much dollars to risk versus how much money you can make, and that's what we're going to be looking at right here, right now. Because there was the price we thought it was going to go, and it's went a lot higher. It went up to 30.65 in the gold, all right? And what we're saying is, look at this. This is the long term. Tom O'Brien, remember when he started talking about the King Dollar and the U.S. Gold, buying gold around 238 way back in January of 01? And by golly, looks where we are. We've seen now. Look at this now. These are long-term monthly charts. So the difference between 29.94 and 30.16 or 30.64 is very, very small, folks. Here's what I'm going to try to show you. Look at the potential here if something goes wrong. Okay, on this day in August, that week, it dropped from $1,900 an ounce to $500 an ounce, dropped $400 an ounce in 10 days. Okay, now here's where we are up in here now with all this stuff going on, with open interest dropping, prices accelerating, everybody's bullish. I happen to be the only person on the planet that is bearish, and of course I live on Mars, I live on confusion. I live on the planet of confusion. That's right next to Jupiter. Okay, now anyway, that's what I'm saying. It's got such a great potential here to see whether it's going to work or not. But I think I had one more that I wanted to mention. Yeah, there's the silver monthly chart. We hit this 3 days ago. Folks, we hit this 3 days ago, and I did this chart a week ago. Silver is now trading below $34. It was $33.65 this morning. It dropped $1.50 from here in 3 days. If you look at the prices of platinum and the prices of what's the other one I want to look at? Copper. Well, copper's still looking pretty good, but boy, platinum they've nailed that thing. I mean, it's hit the 786 and it's dropped almost $100 an ounce. So those are the ones that I'm watching for, paying attention to, because that's when you got a market acting lopsided. That's when you could get into the real problem. This one in particular about silver is really, you can see here, there's today's action. Just a little while ago, it was trading at 33.90. 3 days ago, okay, it was trading at 35.28. And now we've dropped $1.50 here just real quickly, and now it's come back to see it. So there's where you were watching here. But it's completed all the patterns, and boy, oh boy, does that certainly look like it's going to be a wild one. I don't know, but it has all the earmarks of doing something like that, okay? Now we've got, hold on, I've got to cover some things here on the currency, sorry folks, on the currency front and stuff. And I want to give this to you here just a little bit here where we are. No matter what happens, folks, these are going to be great trading markets, okay? Even when markets go down, there's great trading opportunities. I pointed this out before because here's the chart of the Dow Jones Industrial Average over the 3 years that it was down from September 3rd of 29 until 32. Okay, this is almost 2.5 years. Bottomed here on July the 5th. But look at this. Look at A, B, C, D, 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 A, B, C, D. Maybe there's something to this, Johnny. You can put the placard away now, my friend, because the rest of the listeners are not able to listen to us today. But I still say from the deepest part of my psyche, this is where the problem is going to come from, and that is margin debt. Because if we've seen a very orderly correction that's come down here, and all we've been able to do is to rally 5 or 6 days, and not only that, but yeah, it looks great. Intraday, you're down 2,000 or something in the Dow. Next thing you're up 300, but it's gone nowhere. None of those have. They've all been, they're all off the highs already this morning, and here we are standing over this day that we think is important, and then we're looking at what's happening in Hong Kong and in Germany. And China, and what's the other one I'm trying to think of? The UK. So that's telling you that, wow, it's going to be pretty nasty coming in this next week. And nasty, I mean, we haven't seen anything really bad. I think we've seen 3% move in the S&P, and that was in January. We had that monster drop, and then it rallied back and made new highs. This time, there's no new highs. Look like they're going to be here, folks. All right. Now, none of this stuff that we're looking at here. Here's this cash, just to give you an idea. There's the cash S&P. We're going to count the days. Okay. 1, 2, 3, 4, 5, 6, 7th day. Okay. And we didn't make a new higher high today. We couldn't even take out that higher high. That was the real key. Came very close, but we didn't do it. The only ones that took it out were the Dow Jones, by just a really small 20 points in the Dow, and then also the NASDAQ by just a couple of points. So this has the possibility of being that significant high. We're going to know it for sure when we come in here tomorrow after all night trading and stuff. Then we'll know where we are. And then we have the what we call the quagmire of guessing whether is this date going to be a major bottom of some kind. Well, I'll tell you, folks, the technical part of it, just looking at, the big down day and then the 8-day rally, that is not very, very good, folks. That's what they call the DCB. And it's not a winery over in the Napa Valley that means dead cat bounce. I hate to say anything against the kiddies, but they don't bother me. I don't bother them. Folks, I'm 80, going to be 85 pretty soon. I have never even had a goldfish. I've never had a dog, a cat, goldfish. I've had a couple of ponies, but unfortunately they don't do as well as you might think, and they eat a whole lot more. Anyway, we've got some big things getting ready to happen, folks, this coming week. And I hope it's going to be with you, and we'll see how we can make some money off of it. Remember, when these markets break, they're not going to go straight down. They might for a while, but then there's going to be a bounce. So your idea is to put the market.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Okay, folks, a little 2 cents worth of technical analysis. Someone's asked me, how does this happen where the Dow Jones opens lower and rallies 550 points? Folks, when you see something like this happening in stock index futures, that's short covering. Okay, that is flat short covering. That's what it is. What you want to do is find out, why is this important? So if you've been looking at it on a daily basis, all it did was go back and take out the previous day's high by 20 points and then just flat rolled over. Now, the $64 question is, what if it takes out? We're trading at 22.26. That's 200 points from right here with 2.5 hours to go. What happens if we take out this low right here, which is at 420? Okay, what would that mean? Is it means you'd have a potential outside day coming into those days, 1, 2, 3, 4, 5. Oh boy, this could be the kind, because these really move quickly. Now let's go back to that smaller chart, the 8-minute. I wanted to show you something here, because this is what I've been actually watching this, folks. I try to do my best to do what I say, what I preach, or preach what I say. And anyway, there's our first move right here. We come up, we make a big ABCD that there's no D, and we just keeps accelerating. So we have a little rally here of a half an hour. So the first thing I do is I go back to the last hour, and I want to see if that's going to be a 382, and there it is, right on the money. Now, the market rallied into that 382. It took an hour to do that. It went from 23.25. It rallied 100 points. That's all it's been rallying. Now, here's where we are. We just came down here, made a low at 22.31, and then the other one should go to 43.31, which is right there. And then all I want to see is if that's going to be another ABCD. And there, I was thinking 43.31. Oh, you know what it is? It's off. Let's take off the secondary high. Yeah, it's 43.31 is the number we want to be watching, and that would come in right about here. That's equal to this rally right here. That's all that is. And as you can see here, had a nice little bump here, 50 points real quickly, and it's still jumping. So we might get a good rally. And because it's halfway to go in the day, you could even get, believe it or not, and I prefer to believe it, there's your high right here. There's your low, and there's your number right there, 42372. It could rally 100 points. Oh, it can't rally 100 points. Timeout, operator. Look on the left side of the chart. You think this is 100 points? This is 100 points in 8 minutes. Actually, it's 150 points in 8 minutes. So tell me it can't rally up there. That's not a problem. All right. And this was good support here. The reason why, and these people know what these numbers are. They're not dummies down there. There it is right there, almost right on your 618 right there. Now we're having the bounce. So let's see if the bounce gets to here. Got 2.5 hours to go, but the thing is they're running out of time, because the time on the wall said this should only be a 6 or 8 day rally, and today's that day. It's either 20th or 21st, closing badly on Friday. Do not be long over the weekend, folks. I'd be really skeptical. I would really be really skeptical, especially because there's going to be some targets shooting down in that direction, and the worst thing that could happen is that you close really badly on Monday. In other words, you take out the lows of the 14th, that big, in the S&P, that's 5505 or something like that. You do that, folks, and there's 5 letters that will describe what's going to happen next week. Is a big C, a little a, big C, don't know how to spell, a big C, a little R, a little A, a little S, and a big H. A CRASH, crash. How often do we have those? Not very often. The last big one we had was in 87. The one before that was back in 1929. We had some big down moves all there, but crash is when you drop more than 12-15% in one day. In October of 27, we dropped 27. Of 87, we dropped 16% in the Dow in one day. So let's do a quick math here. The Dow's at 4,200, and 16% of that would be 26. So the Dow would be down 2,600 points, and it would be trading at around 1,900, right? Yeah, it'd be trading around 1,900. Now, do you think that can happen? No, it's an outlier event. You don't want to, gauge on outlier events. You're not making money on those. Go by the little ABCDs. First of all, you don't have to risk very much. But let's just for kicks and giggles, and I hate to do this, but we're going to do it anyway, since this is our show. We're going to put up the long-term monthly here and see that, wow, there is some type of vacuum going on in here. Now, this is where we are right here, okay? Now, to get to that level, see, if you drop to 16%, 1.6 would take you to 2,600. That would be, man, that'd be 26,000. That'd be down here. That really scared the bejeebies. But we had a couple of big moves here. We went from 2970. We dropped 1,100 points in 2 days here, back when the COVID boys were playing. Okay, that was this move right. Well, that's that move right there. We could easily do that, and that would take you down 1,000 points, 900 points in the Dow. I'm not saying it's going to happen, but there's a chance of doing it. That really is. Now, I think if you get back here to, well, you don't even show 1987 anymore because they probably don't even save the data. There was the big move down in that one, and how much was this move down? Let's just double check here because they usually repeat over and over again. It's been a while since I went back and looked at this because this was an October high when Bernanke came out and said, boy, everything looks good except in real estate, and that's what he was talking about. And we'll get up here and we'll move this here and click on, oh, come on, Larry, God darn it. Give me a break here, folks, and hold on a second. Okay, that's what we want to look at. And I'll move that, I'll get that over here like this. All right, now let's just bring that thing over. Remember, the Dow was down around 7,000 there. It was around 14, it dropped in half. Now we're going to see what this could possibly be as we come into 2025 and see if it can repeat itself and legitimately do so, okay? So, because that might be a good buying opportunity, because the last time we had something like that, and we're just going to put it up here right now, and that would take us down to, not bad, 3,700. That's only 700 points, folks. 700 points would match up with the bottom right in here. I think it's coming down in here somewhere, but the first stop could be down in here if it gets really nasty. All right, that's all I'm looking at. Is looking at this on a real short-term basis. You know, we're seeing whether we can get that last little rally here to see if we can make that up here 31 change. We'll put the beeper in just in case it gets there, and we'll see what happens. And all I'm doing here, this is just a 4-minute chart, and it tells me what the market's doing real easily. Look, 1, 2, 3, 4 for rallies, 20 minutes down. 1, 2, 3, 4, 5 rallies, a half an hour is down. 1, 2, 3, 4. How much more do we got? 2 bars. Where's it going to go to? Probably equal to that one, and that's that number right there. So when that beeps and we come back from the break, we're all going to have some applesauce cake. I just baked some today. I think you'll love it. If you believe that, yeah, sure.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the fund involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, this is see, we made a 382 rally so far. It didn't quite get to the level we wanted to, but I wanted to bring platinum up. We have a very, very dear friend over in Cairo that happens to be one of the largest platinum dudes around, and this is the long-term weekly on this. I want to go down to the daily to show you what happened here just a couple days ago. Now, here's where we were. You can see that, and look where we are today, folks. We've broken down very, very badly. And that tells us that we're, heading far. So there's your, within $1 of the exact 786. Well, in fact, I even drew it wrong, didn't I? Let's just draw it right for kicks and giggles to see how close I was. But this is along with silver, see, I went exactly to the 786, and it's now down 40 handles. Folks, the biggest percentage dollar for dollar trade that you can have is to be short gold. I know you think I've lost, well, I have lost it for sure, but sometimes I found it. But anyway, that we happen to be in those puts. Now I'm trying to talk myself into a trade, but when you look at everything, where it is straight up, and the fact that there's no players coming in, there's no huge open interest, there's not huge volume, the volume's dropping like crazy. How do you like to go to a restaurant? You got the greatest food in the world, the cheapest food in the world, nobody shows up. That's what's happening in the gold market. The question is, it's going to leave a vacuum in there, and that's what's going to be the first, remember in Hong Kong in 11, the first 14 days, it dropped $400 an ounce from 1,900 to 1,500 in 10 trading days, okay? Now, here we are at 3,060, and what happens if we did the same amount? You know what that is? That's $1,000 an ounce in 10 trading days. And if you think it can't do that, $1,000 an ounce is still a bull market, because that's not that going to be much of a problem. That's still just a 382. I don't know if it's going to happen like that, but it's acting like it wants to happen like that. And that in lies the key of what we're watching here as we're seeing these things unfold, okay? So I hope that helps anyway. We'll find out as we go through and look at some of these other. Hold on just a second, folks. Gonna have to sneeze. They don't have any trees over here, but there's still something got to me. All right, I think we're getting back up on that. See, we did make the 382. We came back and hit it again now in this last one right here. So it's telling us we've done the same thing here in the Dow that we just did before, okay? Now, the first time it does something different, then that'll give us a pretty good idea that maybe something's happened. All the rallies since a couple hours ago have been that amount, okay? And there's where we are. When we get to that amount, that's where we are now. In other words, this is 1, 2, 3, 4 days up, or periods up, 1, 2, 3, 4 days up. So if this is any good, it's not good. There's your number right there, 43.24. If it gets above that, then maybe it's going to go higher. And that is almost 100 points in the Dow, and it's a matter of a few minutes. We're seeing big swings here. Now, since we're seeing big swings, let's take a look here at the euro over here. Now, there's the same thing here in the euro. We've had some big swings here. This is the hourly chart. Now, there's where we were 2 days ago. And then you can see we're coming down now, getting ready. I think we just made the target here, or very, very close. There was your A leg right here. There was your B leg right here. And there's your CD leg right there. And we've already started to bounce a little bit from that level. So the key now is, because we come down hard for 2 days, is this just a part of a bull market, or is it getting ready to go something a lot higher? So the first thing you would do to answer that question would be to see how the market came down. You'd look at the time that it took to come down from this high down to that low. Took that long, and I can see that right now didn't take anywhere near that here. See, this was too fast. So the timing doesn't help you too much. So the next thing you have to do is to ask yourself, okay, how close is it to something bigger on the chart? So the only way you can do that is to go down to the 4-hour chart, and it'll tell you there's where you are. And so we're going to look at it and see where the only thing standing in its way back here is a 382 way down here on the 28th of February. And look at that. Boy, that would really be something if it got to that point, wouldn't it, folks? Because that is down another 2 some handles. But this is where we are now. This is you've taken out the low, that's good, but you've done it with an ABCD pattern, folks. And this is a flat out ABCD pattern, no question about it. So it should be getting ready, to head north, okay? I hope that helps. Now let's take a quick look at the cattle. Oh, we got to take a quick look at the soybean meal, because we're very bullish that. We bought it at 297. I haven't seen anything ring up on the cash register yet, so it must not be doing much. Hopefully that's not a good trading word, Larry. Hopefully, you want to use hopefully when you're trying to get rid of one of your children so they get married and not bother you. That's a joke. Hold on, time out. Okay, here is the meal. All right, let's get this up here, see where we are. Aha! Is this a big, yeah. Now, wait a minute. This better be a bad tick, and I'm sure it is. Let's see, what is the time frame I have on this? That's a weekly. Come on, Larry, give me a break. Can't get the daily up. These people, this is probably still got. God, we got down. There's your buy point right there in the July meal. Okay. Now we were doing a spot meal at 297. You remember that was the May. So let's get that up. We bought that at 297, and let's see how well it's hold up. The stop would have been at 292, I believe. So there's the meal. We'll get this up here and see where it is, and it's still holding our own here on the daily. We bought it here, rallied a little tiny bit, but it done very, very little here. That's a weekly. Hello, operator, get the chart up like it. Yeah, see, we've made a slightly lower low here, but it's just like a $0.50 low. This is where we originally bought it, 297. Okay, so that's it. We're down 1, 2, 3, 4, 5, 6, 7 days. I still think we got a rally in here, but your stop goes below here, folks. You got to have a stop in, because if you don't, you're telling Mother Market that, by golly, you don't necessarily mean you're going to go in that direction, does it? All right. All right. We had one other question about Senior Tesla. Let's get that up here and see what's going on here. Tesla is right there. We get this up. And it's holding its own right here. This is the weekly. Well, we're getting ready to take out the weekly. Let's just look at the daily, because it's been getting hit pretty hard. It's holding up. It's actually up on the day, which is a good sign, and doesn't look too bad. It's certainly better to buy it down here at the 78% level. There's your 78% at 214, as opposed to buy it up here at 450, for heaven's sakes, right? The other one that really is interesting is NVIDIA, because it's holding up incredibly well, given the fact that some of these others are not. And we'll watch that one. NVIDIA starts with an N, right? NVIDIA, there it is right there. And let's see how it's doing here. Well, it's actually down on the day, but it was up at one time. Let's just look at it to see if it stopped at a 382 of the high that was way back here. And there it is right there, folks. That's not a good sign either. All right, we're going to take a break. So live every day in an attitude of gratitude, and may God bless. And we'll be right back in just a few minutes.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I'm going to leave you with the chart that disturbs me the most. And that, well, doesn't disturb me. Well, it shakes me up. Is we had this 8-day rally that's equivalent to what's going right now. We took out the previous month lows. There was the high. Took out that 1.618 exactly like we did in the NASDAQ. But the trouble is, folks, they can't even make a 382 in 6 days. Do you get my drift? And it happens to be a snow drift. But anyway, that's what the problem is, because if it starts down on Friday would already be 1, but it's down on Monday, that's 2. And then watch out, because as we get closer to here, that's when the proverbial stuff has hit the fan. But look at these huge rallies here. See, the market comes down and rallies all the way up to here. Guess what? Why don't you defy human nature and do the work yourself and see what that ratio was? If 21 was here, he would tell you. He'd hold up the little placard that says 0.382. What was this one? 0.382 off of that one. Okay, that's what we're looking at. What was this one? 0.382 off of this one. After the market bottom, folks, it rallied for 6 months into April the 1st, 1930. It traded at 305, I believe, the exact 618, and from there it went down to 42 on July the 5th of 1932. The words of our good dear friend and master technician, Basil Chapman. Anyway, folks, this is all I've got to say for you today. Try to be nice to your friends and your neighbors, and I hope that you have a good Friday. It's coming up tomorrow. We're going to have more information then, but I see some real ominous signs. When you look across the world at where these markets are, it's a little bit scary. And what we call in that is opportunity. That's what that means. So we'll see you on the flip side. Live every day in an attitude of gratitude, and may God bless.